And everything is the same as in the board meeting script, call to order.
Call to order, public comments, approval of minutes, and then business, and then adjourn.
Okay. I call the meeting of the ABC committee to order. We'll do the roll call
Director Alexander,
here.
Director Gill,
Yeah, I'm here.
Director Chapman is not present.
Next is public comments. At this time, any members of the public will have an opportunity to address the board or the committee on any item that's not on the agenda. Speakers will be limited to 3 minutes. Do we have anyone who wants to speak?
We actually do have a member of the public. They're connecting right now.
Okay,
Hi, it is now public comments. So if any members of the public would like to speak, you can raise your hand and I will acknowledge you. If you're joining by computer, you can just hit the raise hand icon. And if you're calling in, it is *6. You're done.
okay, no comments. Next is approval of the minutes. I'll second.
Okay, ready. Director Alexander,
Yes.
Director Gill,
Yes.
Okay, the next item is committee business. So the informational item, internal controls and how auditors review the authority's financials. Members of the public will have the opportunity to comment on any matter on the agenda, and speakers once again are limited to 3 minutes.
Good evening, directors. Christina Teen, Fiscal Services Officer. And tonight I have the privilege to provide the committee with an overview of one of my more exciting and important reporting requirements that staff delivers annually, because it does mark the end of a fiscal year for us. So as a special district, we are required to engage with an external financial auditor to have them perform an audit in accordance to generally accepted accounting principles, or GAAP. And those whatever guidelines are required by the State Controller's Office as well. Now, we're currently under contract with Moss Levy and Hartzheim, and they're headquartered in Santa Maria, about 4 hours south. They've been conducting our audits for the past 3 years. They are tasked with reviewing and auditing the agency's funds.
External auditor?
Yes, external auditor.
So who's doing internal? Anybody doing internally?
Yes.
Before they just.
So for accounting staff, primarily me and Elisa. No, it's completely fine. But internally, it would be me and Elisa, being the primary two, kind of checking the books. And then our independent external auditor is Moss Levy Hartzheim. Okay. So for the external auditor, they're tasked with reviewing and auditing the agency's funds to render an opinion as to whether we present the financials fairly. And to form that opinion, the auditor takes a risk-based approach to gather appropriate and sufficient evidence, and they observe, they test, compare, and confirm until they gain a reasonable assurance. And so, we have a contract with our external auditor, and some of their scope of work includes reviewing and auditing our funds. And if we receive and spend more than $750,000 of federal funds in a fiscal year, they also are preparing a single audit for us. So it's not applicable if we do not spend more than $750,000. They are also responsible for preparing and submitting the financial transactions report, and that is basically a summary of our financials to the state controller's office. And then as part of the audit presentation to the board, the auditors also prepare a letter to management as well as the board directors, which then provides any reportable conditions or any findings that they might have during the course of an audit. And they present each year. And so, and the deadline is always by this on or before December 1st of each year. And so some of the procedures that they do, there's several audit phases, but some of the more important auditing procedures include inquiring of management and others to kind of gain understanding of our operations and our organization. So auditors would come on site as well as via email, over phone calls. They would speak with staff, primarily the accounting staff, just to get a better understanding of processes and internal controls. By communicating with us, they are able to assess and identify any significant risk, such as fraud risk. And they also would kind of conclude whether there are extraordinary events or conditions that could raise any doubt in the numbers that we present. And so they would kind of assess and determine whether that is a cause for concern as well. So again, communicating with staff, kind of looking through our it's not just purely looking through numbers, but there is communication with staff. Yes.
So the state controller send you some kind of checklist. State controller
Mm-hmm.
send any kind of checklist, so then the external auditors come and then follow that checklist.
No. So what happens is the external auditor follows GAAP, more so of the generally accepted accounting principles. That's industry standard, but not quite. There is no checklist from the state controller's office.
Okay, so what do they usually check? Tell me like, for example, they are checking the balance sheet.
Yes.
They
So
are checking any tax return. Those kind of things, or what?
sure. So in terms of, they would some of the examples of the documents that they pull includes bank statements. So what we report on our balance sheet as our cash balances, does that actually match the cash that's in the bank? So
Okay.
that's, for example, one item. They may also check our parcels revenue. So they would also look at, for example, the invoices or
Yeah.
the remittance that comes from the county assessor's office, as in like, oh, the OSA would have received X dollars. Was that received and deposited into the bank of that amount?
Yeah.
They would also check, and then a bulk of it, we pull a lot of checks, but they will also check invoices. If we received an invoices from vendor A in the amount of X dollars, did we cut a check to vendor A, or was it vendor B in another amount? They also would check whether
Against the vendors, right?
yes, against the vendor invoices.
Yeah.
Similarly, we are more on the lower volume, but any type of invoices that we issue, such as reimbursements of grants, mitigation invoices for reimbursement for fees for mitigation services, they would also do a third-party check in where they would send a letter to, like, let's say if we issued an invoice to a partner agency for reimbursement, they may also send a letter to that that agency to verify that balance. Do you owe the authority X dollars? So again, it's kind of like I kind of equate it to very similar to like how the IRS checks our tax returns. You file your 1040, but then your employers also filed your W2.
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 Yeah.
So then, I mean, they would then cross-reference and make sure nobody's lying, because
Actually, employer is a W4, I think so.
you fill out the W-4 form, but I think you get a W-2.
We get the W, as an employee, you can get the W2.
Right.
And employer send the W4, right?
Well, the W-4 is what you fill out.
Right,
I know.
and at the end of the year.
Well, we also have on the payroll side, there's also a 941, like there's so many different numbers.
Just go for it. I just
But,
want to be,
yeah.
the main goal is to look at that. So whenever any, like the external auditors come and then do any kind of audit. After 2 years, did they find any kind of issues and problems?
No, we've proud to say, since I've been here, it's been, well, even
Since-
even
yeah.
before I was here, it's always been a clean audit.
Don't go too far, since you just took over.
It's been clean audits every
Okay.
year. There have been minor recommendations and we've implemented it over time. But they're, like get an extra signature, go through an extra, second approval. They would recommend to kind of tighten internal controls. Not that there was anything like, explicitly wrong or anything like that, but it was more like, oh, we could see room for improvement. That's mostly some of the feedback we would occasionally get. Yeah.
Room for improvement is, if you look at another sense, it mean we have some kind of glitch there. That's why they are saying, oh, we need to be improved that one.
Yeah, because risk is like a spectrum, right? So it's just more of like to minimize or mitigate against the risk. Is you may choose to implement this to kind of lower that, before it gets, no problem. So they kind of go through the phases at the completion of the audit. They may, like I mentioned, they may offer objective advice for improving financial reporting, for internal controls to kind of maximize our performance and efficiencies. And then finally, by the time they do finish their reporting, that is actually where they would communicate and form that opinion that the statements that we put together is free from misstatement. And whether it's due to fraud or error, and then they would just prepare and deliver that letter to the board and to management, and kind of report all their findings. And so, and as the committee is aware, our agency's fiscal year runs from July 1st to June 30th of each year. And so around the beginning of July, as staff is working hard to kind of close the fiscal year, we also start to reach out to the auditors to plan for the upcoming audit. And they would send us a preliminary list of documents that they need. So like I mentioned, bank statements for one, any depreciation schedule, kind of like a list of all the fixed assets that we had either we're still holding on to or we've acquired during the new year. They also would need to know about our grant balances. Because the grants that we are awarded, we have to track, typically grant agreements are very strict where you can't commingle. It has to be used for a specific purpose. And so we have to keep all that kind of documentation. And so they would want to look at our balances, how we spend it down, and they would review that. Look at credit card statements, they look at lease agreements. So again, that's a form of revenue where the lease agreements, they would look and see, did we recognize that revenue correctly? Is it being reported on the statements? They would also look at our salary pay plan. So they also look through payroll. There are taxes, our staff salaries. Then we plan to schedule the field audit date. So all this prior is they give us a list, we're compiling it, and we actually do schedule for them to actually come on site. So they actually are in the building. And it typically lasts 2 to 3 business days. And they will actually stay in this pretty much scouring through documents. And when the auditors are on site, so that's the second phase, the field work, they'll ask staff to pull additional documentation, mainly they would ask us to pull additional documentations, mainly checks, check stubs, They'll also may look at contracts and bidding documents. So if there's a transaction that's reaching our 25,000 threshold, to make sure we're compliant, they may ask for bidding documents, who submitted the bids.
They usually check everything, or they just have maybe 10% or 20%.
It varies because based on the volume of transaction during a fiscal year, but it is a sample. An audit is never 100%. But it would be based on, I cannot dictate it. They basically determine it to a level where they are confident that they can say, hey, I looked at enough, it's good.
And might be, sorry, might be if they find any issues, then they will ask you, I
Yes.
need to do more audit or
Yes.
bring more.
So what happens is they may look for more detailed information. So besides, for example, if I can pretty much envision with Mano Yakima opening lots of large invoices that we paid, I can totally see them, envision them looking to wanting to see the contractor, the general contractor contract. But besides that, they want to see the bidding because were other people bidding. But at the same time, looking at the minutes in the board, whether the board approved it. So it's not like staff entered into agreement and just went with the vendor. So they would kind of follow through, making sure we're compliant with policies as well. So it could be where they may be comfortable just looking at the contract. It's like, oh, look, there's a signature, that's good. Or they can also just ask for more and be like, can I go beyond and start looking for? And they do scour our website. They do go through minutes as well, to kind of look through at what board has approved and as well. And so they also they have access to our financial system, Acumatica. They have a login and they're basically just in there. So not only are we pulling documentation for them, they're actually just running reports in the system themselves without asking us. And so that way they can follow the system's audit trail, who entered it, who modified it, because the system does track that kind of data. So they are not only looking at the transaction, but whether, again, the internal controls of who has access to the system, who's entering this kind of stuff. And they can also look at the purchase orders and review the approvals to see if each transaction had the appropriate approvals. And they've been known to pull, and I should have brought an example, but they've been known to pull about, I think each year an average about 3 to 4 banker boxes worth that we end up having to file back at the end of an audit. But so, I mean, it's a fair amount of transaction. It really depends. And they always look at, auditors always use the word material and immaterial. So they look for large amounts, and I know small amounts may add up, but it's, again, they're looking at the most prominent transactions that might be prone to fraud. And so they would kind of analyze the number of transactions, but also the kind of the, what would the word be? Kind of like the value of the transaction as well. So they'll also sit with accounting staff to kind of inquire about any knowledge of fraud risk. And so, for example, they would ask us if anything had happened during the year, how we process the transaction, kind of see if there's any changes in how we would process who gets approved, who are we aware of any fraudulent activity. And so they would sample around 3 to 4 people randomly, typically folks that have either access to approving a transaction or paying out a transaction and coming in contact with each transaction as well. And then they would also, each year we would have to fill out an IT questionnaire, an information technology questionnaire. That way they can also assess cybersecurity. Because again, with the accounting system, who has access? Not only is it login, but there's different modules to the accounting system and who has access to which parts of the system. Because each role might be different, where some person has approval, some staff may not have approval permissions. in the system. And so they would also have us fill out that questionnaire and they would review that questionnaire and see. I'm sorry?
Authentication and authority, so who has the authority to go that system? And then their applications as well.
So
So what level the person has to look at and what kind of module they can look at, and those kind of things might be they will look at also.
Yep. And currently in our system, we have 2 administrators, because just, one for backup, just in case. And then the auditors have all access to the system so that they can run the report. And then the rest of staff are usually just in the purchase order and AP bill modules. And then there are 2 other staff that have access to the projects module, and that's actually the grants team, because they actually create the project IDs for the grants when those are awarded. But other than that, we pretty much kind of keep access. I get very protective and make sure I don't want anything messed up, in the system. So there's not a lot of people that have administrative access. Yeah. They'll also confirm whether there were any policy updates or changes to any accounting processes. So if we have any update to our policies that the board had approved, I'll pull it down from our website, give them a copy for them to review, because that way they can update their records and make sure that we comply. And on the last day, staff typically conducts a meeting with the auditors. Often that's when we review those room for improvement areas. They communicate the timeline for when they can get the draft financials to us. And then we hold time to kind of go over any questions. And they also provide any updates to the GASB rules. So that's the Governmental Accounting Standards Board. It's very similar to GAAP, where they kind of establish the rules on how to book certain transactions, such as deferred revenue or prepaid, accrued expenses, leasing agreements. There's always a whole bunch of new numbers that comes up, and they keep us kind of apprised of those updates, especially the ones that affect us. And so those are usually on the last day. That kind of gives us a little bit of information. And then after the auditors depart, we basically refile all the documents, and we're also continuing to be available to the auditors in case they have follow-up questions. Staff is responsible for writing the management's discussion and analysis. It's basically a summary. It's the beginning of the financial section. So by the time we have audited financial statements, usually the report is in 3 sections. The first one's a financial section. It includes the auditor's report. That's where they express their opinion. Then we've got the management discussion and analysis. Think of it as an executive summary of the financials.
What is that management discussion and analysis? Give me a little bit.
So it's typically the second part. So in a financial in the financial report that the board receives in December, there's usually 3 sections, and then in the first section, the beginning is the auditor's opinion. Yeah, and then right after that, we would have our management's discussion analysis, which staff typically writes. It's like the executive summary of the financials. We kind of summarize, here are our fund balances. Here's our budget for next year. We anticipate if we spend according to budget, this is how much we might have left in the carryover balance. We might talk about any type of major changes, talk about revenues, changes in fixed assets, balances. There basically is just an overview of what's to come, because what you would get then is what you're familiar with, the government-wide financials and the fund financials with the balance sheet and the statement.
The question is that when you have the independent auditor report, they have the report, and after that,
Oh.
you guys make any kind of in the management, you guys have.
I see. So actually when they submit the draft and staff's reviewing it and we're looking it over and it looks good, we're actually then putting together the discussion analysis. We send it to them, then they compile it into the final. Yeah, so by the time the final audited financials are released, it already includes the management discussion analysis. Yeah, sorry, thank you. I remember, I get it now. And so there are 2 sets in the financial statements, government-wide one and the fund financial ones. The government-wide financial statements, they consist of a statement of net assets and a statement of activities. They focus more on the accrual basis of accounting, and they report all the liabilities and gains and losses of government activities. But what happens is with the fund financials, they basically are a balance sheet and a statement of revenues, expenditures, and changes in fund balance. And capital assets and long-term liabilities are not included in fund financials. So for example, you won't see the value of our properties, nor would you see the liability of our pension in the fund financial statements. It is basically just activity during the year in terms of expenditures, expenses, and the revenues. It is actually very close to what the board receives quarterly in terms of the profit and loss statement and the balance sheet that's staff presents. The government-wide one is a little bit more extensive, where it does include the value of our land, buildings, and vehicles, like just the capital assets. And also, they would then look at the actuarials of our pensions and also put that value into the government-wide financials too. And then then they would also accompany the notes. So the notes usually kind of explains the numbers a bit. They, for example, some of the notes, it would describe what is considered a capital asset, how long is the life of the asset. It, like, a land might be 20 years, a vehicle might be 5 years. It's all defined in there for any members of the public, for the board to kind of review and be like, this is how we establish and present the numbers.
So you are the one leading everything that one, like the note or all kind of stuff.
The notes, so I review them, but most of the time it starts, the draft is first drafted by the auditors, because it's what they are familiar with learning from us, our policies and procedures. For example, our investments, they would also summarize from the reports our financial advisors provide. They would put down the credit risk of our investments. They would have notes on the duration and how long, whether it complies with our investment policy. Those are usually standard language that they would include in there, but obviously staff also reviews to make sure they're aligned with what we're also kind of enforcing. And then the next section of the financial statement is the required supplementary information. Typically, those are the budget versus actual. So we usually have 3 schedules, one for District 1, Measure T, Measure Q. And then the 2 other ones are related to the pension. So again, each year, CalPERS releases an actuarial. The auditors review that, and they also then put in the information that they pull out from the actuarial, actually. So it's not information that we calculate. It's not information that the auditors calculate. They're just reporting what CalPERS have calculated, and that gets put into our audited statements. And then at the very end, there is one small, very thin section, usually about 2 pages, where they put a report on the internal controls. So just kind of their comment on whether they have talked to us, they've reviewed, assessed, and feel that we are, reasonable. The financials were kind of put together, presented under, the appropriate internal controls that staff has used.
Let me ask one question. Is actually, so whenever the agency's internal auditors or whoever is doing internal audit, so that kind of report you guys are just giving to the external auditor or no?
No, quite frankly, what you consider an internal audit.
Yeah, so when you guys are doing that,
it's not quite like in a formal document. We just do kind of quarterly, monthly, quarterly, each time we close the month and the quarter.
We don't have to do like the external audit. If you guys can just stop, this is just I'm thinking. So if internal audit is doing in a proper way, So we documented and we have all the reports
Mhm.
there. It's much easier for the external audit, even though they are doing their own.
Mhm.
But once they see that one, they are happy. Oh, you guys did a great job.
Yeah.
And then they don't have to be do too much. And they try to be just look at like 5% or 10%, they will go away. I'm just thinking that might be its best idea, or what do you think?
It could be possible. It gives, I mean, if I were to stand in their shoes as an external auditor, I could see, oh, look, they got their stuff together. I could totally, envision a more higher confidence.
More clean.
Yeah, but then I don't know if that would deter them from still performing what they need to perform to meet a reasonable assurance. I can't speak for them.
I think from having had audits,
Mhm.
I think they have their own.
Yeah, like,
Agenda that they want to.
yeah, I
to
think
follow.
personally, like they might feel like, oh, yeah, they got it. They, but they still have to have their lists and their kind of own assurance
Right.
to do.
Because if you really want to pull one over on them, what better way than to,
It wouldn't be very independent.
Yeah.
In that sense.
I understand that, but my question is not that we have to be dictate them what they want to do. They have their own
Mhm.
agenda. I'm talking about only internally. Whenever we doing any internal audit, then we have to be documented those kind of audit. If anybody want to be see, like the board is requesting, do you have any internal audit? So might be you guys has somewhere, then we can look at it. This is just my thinking, might be black and white, some kind of documents. So you said you guys are not doing that, right?
Not to an extent what I'm aware of, like a large company where they have their own internal controls department or internal audit department. We don't, at this present time, we don't have the capacity to have such a separation of duty where the accounting team enters everything and there's someone sitting overseeing whether the accounting team is
I'm
quite.
just spitting out. It's not meaning we have to do
Yeah.
it, but I'm thinking might be if we
Yeah.
start that kind of process, do we have the manpower to do it?
Yeah, we
And
definitely
might be-
self-audit ourselves. We
Yeah.
run our reports, double check our work, but not quite like a separate person per se.
If I could add to that for a second. So, right, we don't have an independent group internally to do the audit, so there is a lot of cross-checking, division of duties. There's some things that I double check, for example, signing checks. Is it, is the invoice, is the check made out to the vendor on the invoice, do the amounts match? Things like that, and we are signing off on things, but we don't produce a report.
Mhm.
So I think the checks and balances are there. I hear what you're saying about adding to the external auditor's confidence by perhaps documenting more that we're doing these things. But that is the purpose of their staff interviews as well. And as they're going through the documents in the system, they can see that we're following procedure. As Director Alexander said, they're independent auditors, so they still have to do all that work. We definitely don't want them to take staff's word for. Sure, we've been checking all along. We actually want them to pull and follow the transactions all the way through to make sure that there isn't anything that was missed.
Yeah, thank you. The reason I asked because like that I work very big and small companies, and we have the staff
Mhm.
to do the audit.
Mhm.
That is auditors, or you can say the audit department inside the quality assurance.
Mhm.
Okay, so then so those persons, their responsibility to have to do the audit, internal audit before the external auditors come to do that. In that way, like the upper management, they have more confidence.
Mhm.
When they just look at the internal auditors, everything is fine. So up to date, and then they are against whatever the things they have to be checked. It is like, for example, IT.
Mhm.
They have their own checklist, what they want to be checked, and like you told, so security and then authentication, those kind of things. I'm not talking about the small company, I'm talking about like 5,000 employees, like the
Mhm.
Flextronic, I was
Yeah.
the vice president there. So then in the IT department, I have almost 300 employees there. So, and then a lot of equipment, and then we have to be checked that. So if the government or anybody else just come and then audit that, then if I don't know, so
Mhm.
what is the internal audit is look like, and then they can say anything. Then I cannot just tell my employees or my subordinate, oh, what happened? Why is it doing that? Because I have to know that. So what's going on inside there before somebody else just tell our mistakes. That's why I'm saying we have that kind of audit. If it's not, that's I'm not going to say yes, you guys have to start it, but I'm just telling that's the way usually the companies doing that.
Mhm.
Yeah, sorry for that.
No worries. Let's see. So just to kind of wrap up, so after we get the audited financial statements, we filed the financial transaction report to the state. We also send it to the county's finance office for their records, and we also upload it to our website so that members of the public can also review it. Besides that, so we send it to the state, send it to the county, put it on our website. We also present it to the board annually at a publicly held meeting. A separate report focused on Measure Q and Measure T funds is also provided and presented to the expenditure plan oversight committee. Thank you. And for every January following close of the fiscal year, because they are also charged with reviewing the spending for Measure Q and Measure T expenses. And so this document or the financial statement documents basically provides accountability and transparency to the public of how much revenues that we receive and expenditures that were spent. And then the oversight committee would utilize that document as one of the tools, because they also do get provided a status report, and as well as they perform their own mini audit as well. They would pull out sample transactions as well. So that way they also have an assurance that a professional independent financial auditors reviewed our transactions, and they also get to kind of get their eyes on it as well. And all of this happens around August to December of each year following close, June 30th close. So what else does staff do for the remainder of the year? So because our end goal is to get a clean audit, in order to do so, we do follow best practices for internal controls. Internal controls are basically any type of mechanism or rules or procedures that are implemented by the agency to ensure the integrity of the financials, and kind of promote the accountability and prevent fraud. And so kind of, in response to Director Gill's comment, while there's no formal role or a person that solely just focuses on internal audit of our transactions, we do have separation of duties. We also have pre-approvals, and then we have kind of access controls in the system, as well as staff training. But because there's separation, our biggest one is the separation of duties, basically kind of to prevent from one full transaction from one person handling it all and not having any kind of oversight. And so that kind of, typically those are preventative, is to prevent from something bad from happening to begin with, before they can occur. And so typically, yes. Sorry, I didn't catch that. Yes. But what happens, it's essential because it's proactive, rather than it's focused on quality. So we have policies that the board approves that staff adhere to. And then we basically, accounting staff is the enforcers of that, for that compliance. And in Acumatica with the software, definitely that's our main tool for access control.
America, that's the ERP system?
Yes, it's an ERP system. And basically that limits who can enter or modify transactions. And so we provide also continuous training to kind of refresh them on policies and the system itself. Then there's the detective controls. So I would say this is the one that's closely to what the internal auditors would do. But basically they're designed to find the errors and problems after the transactions occurred, but before the auditors come in. Yeah, so that's typically a little bit more on my end. So again, because separation of duties, we have our staff accountant kind of, inputting transactions. But I would be the one every, monthly kind of reviewing the profit and loss statement, the balance sheet, as well as running quarterly to kind of just look at the transactions, look if they were coded correctly, and be like, again, the separation of duties is the staff accountant may be entering the bills, but she can't approve it for payment. Someone else does, which is me, but I also can't sign the checks, even though I approve the payment, someone else does. So it's more of like each phase it might, to some people be like, oh, too many cooks in the kitchen, but there's a purpose to that. And it's not to let someone enter a bill, cut the check, and then, again, you might hear stories of the fraudulent kind of, you go from cutting the check as an invoice that's to their own company or etc. I'm sorry?
Yes, take another piece.
So yeah, so the thing is that part is where I would say, again, not a very formal internal audit, but it happens, and it happens on at least a monthly basis. And again, it's not 100%. I sample, I admit, I can't look through every transaction, but again, it's might be glaring, what may raise red flags, very similar to what an external audit would do, but then I'm the internal employee doing it. And then so, once the budget's approved, we review, we match, make sure, we always check against budget versus actual, make sure we're on track. We report to the board on a quarterly basis. We run project cost reports for project managers to make sure they're kind of on track with their spending as well. We basically just check our work throughout the year in anticipation for the auditors, so that we can pass tests, and get that clean audit. And so that kind of happens there you have it. That's what our accounting team is responsible for throughout the fiscal year. So in about two weeks, our auditors will actually be on site here. And they'll have, I think this time around, they'll be here for 2 days. They held a third day just in case. But they're going to review our numbers for fiscal year 2022 to 2023. And we look forward to sharing positive news to the board in November of this year, the first meeting in November. But I'll be on leave at that time, but someone else will cover. But they'll be responsible for that presentation. But any other questions, I'll be more than happy to answer. Okay. But that's what I do all year, in case you're wondering what I do.
Thank you.
No problem.
Okay. I think that's it, right? Questions?
Do you want to ask, there's members of the public?
Who wish to speak? Any questions? Any members of the public?
Feel free to raise your hand and I will, and you can unmute yourself. Do you have any questions at this time?
Okay, no questions from the public. That looks like the end of the agenda, so the meeting is adjourned.